So I'm going to just put a different lens. I think there's been a lot of merchants in the room, a lot of people who understand technology in the room. I'm going to take a bank-centric view. Some of you know who FIS is. FIS is the largest provider of technology to banks. We're about a $6 billion company, global company, and we provide a lot of the technology to the networks, Visa, MasterCard. We have our own network, our PIN-based debit network, NICE. And now we have a new real-time network, and I'm going to tell you about what we're doing and why we developed it and really what it's about. So the model, and I know this is hard for folks to get your head around. Really, we talked about a lot of, I heard Dee talk about payment tenders. That was a good thing. What can be in the wallet, and having her wallet be able to handle additional payment tenders. So just think, how can we really pay for things today, right? We can pay for cash. We can use a check. We can use ACH, that's the electronic version of a check in the US. We can do wires, or we have these things called cards, right? There's two sides of cards. We can do credit cards, or we can do debit cards. So what we're doing is an additional network, an additional rail, and we're calling it PayNet. So it's not a card, it's not ACH, it's not wire, it's PayNet. And I'm going to tell you about that and why we're doing it and what it's all about. So I really, I'm going to probably, for the sake of argument, since I'm like one of the few bankers in the room, just take a very bank-centric view of this today. But really, we're the network. We sit in between the issuers, the banks, and the originators, whether that's a bank-centric originator, like in a P2P model, or the mobile payment services that we're talking about today. And I'll tell you how we got here, where we are today around mobile payments. See if we get this moving. There we go. So market drivers. So before I get there, I was saying the bank-centric view. So I've worked, so I work at FIS, obviously. I've consulted, I had a consulting firm that we sold to FIS, and we consulted to folks like PayPal and MasterCard and Metavante. They were in Milwaukee, and FIS. And FIS bought Metavante, and then we came and we joined FIS, and we ran corporate strategy for 2 years. And then one of the things that we did is we did business cases to say, where should FIS move? And one thing was, hey, all the cool kids, this real-time payment thing, maybe it's going to be a real cool thing. They're doing it around the globe. We provided the technology in the UK that's called Faster Payments. We provided the technology that runs Faster Payments in the UK. We provide the technology. Someone mentioned how the Australians moved to a one PIN-based debit network. We provided the technology for that. So we looked not just domestically, and I'll talk about that, we looked globally. And then I also, I worked, at one point I ran payments and the online bank for Citizens, which bought Charter One here, so from Chicago to Boston. And then I also, I'm a founder of a bank, a small community bank, 250 million. One of the other founders is in the room as well. So I try to understand what the banks are looking for and really try to drive a new rail for us. So from a bank perspective, we look at all these new entrants in the market. Softcard, formerly ISIS, Currency, formerly MCX, the cards, Bitcoin, Clear Exchange, Mobile Wallet, and PayPal. And we say, we're banks. We're going to be disintermediated. Isn't that our business? We have these consumers. They give us deposits, and then we make loans on them, but we want to be in this payment business too. We want to get there, and we want to do stuff. There's a lot of regulation going on. So the CFPB, the Consumer Safety Financial Protection Board, I've literally been there twice getting grilled down in Washington and talking about what is real-time payments, what are you doing, how are you going to affect payments. And in fact, they like it. And so the ACH infrastructure that we're really trying to replace is a batch-oriented world. I heard a lot about technology today. And one of the reasons with this presentation and why we want a new payment network is the infrastructure is old. It's 40, 50 years old. I heard we're building on top of old technology. Well, if we can just create a new network, we can do a lot of the things I've heard about today. We can tokenize. We can encrypt. So we can do an end-to-end transaction that is truly secure from front to back. Will it ever? I would never stand up here and say it could never be hacked. These guys are really smart. When I was at Citizens, we had a breach. At FIS, we've had a breach. These guys are spending, millions and hundreds of millions of dollars on the bad guys. But we will make it a lot tougher, and it's a lot easier to do it in a new environment and a new real-time rail than the existing. And that's one of the reasons why. It's just like, think about it, renovating your house or just starting from scratch and building brand new. That's what PayNet's all about, is just building a brand new network. So the other, so this is Durbin. They're regulating the debit interchange. That's driven down the cost of payments. So the retailers in the room really like that. The banks don't like that. We can talk about that. We don't care. We sit in the middle. Remember, I'm the intermediary between the issuers and the merchants. So we still make our couple of pennies in between. So that's good. And then what really is driving a lot this, how many people know about the Federal Reserve in a pursuit of a better payment system? Anyone? So for those who don't, there was actually a meeting here 2 weeks ago in Chicago. The Chicago Fed is leading a movement to move to real-time payments. What does that mean? So that means what I'm talking about here, allowing real-time movement of money, good funds, from a consumer's bank account to a merchant or to another bank account, simply put. So instead of ACH in the batch, which is 1 day, 2 days, or 3 days delayed, or wires, who most people think that those are real time, which once somebody eventually hits the enter button, they're real time, but there's not straight through processing with wires. It's a 40-year-old meant for sovereign debt movements between countries that we've adopted to do things like house closings and a lot of other large-scale money movements. But think about a new network that can move money from a regulated bank account to a broker-dealer. So if you have a Fidelity investment account or a Morgan Stanley account, you try to move money from your regulated bank into your trading account, you can't trade on that right away. There's no T+0. It's T+1, T+2 days to trade. In some cases, it could be 4, 5, 6 days to get your money out of a brokerage, or even PayPal, getting money in and out. So think about now a world where you can have a regulated bank account, move money in real time into these environments. So we're working with the Fed, and we're aligning with what they're doing. They were supposed to come out with their white paper last Thursday. They delayed it. There was a meeting actually last Monday in Boston at the Boston Fed, which had all the presidents. So this is all the way up to the Janet Yellens of the world, and there's 14 bank presidents deciding how they're going to participate in the network. And of course, we told them, you can just work with us, and we can have pilots, and hopefully it works out that way. I suspect when we talk about what things going on around the globe, that will be one of the solutions. Here in the U.S., there's not just one solution for anything. We're not a small country. We have 10,000 financial institutions, 100,000 retailers. We in no way will do one. It'll be, if folks were around in the banking days when we had to do two-factor authentication for online banking, the FFIEC, the governing body, didn't say, you must do it this way. There was just kind of a de facto standard. This company called Passmark, they did it with B of A, and that became the standard. Obviously, it's not working today, and we're evolving that. But the Fed didn't tell us how to do it. They just said, you need to do this. And I suspect they're going to do the same in payments. I'm not going to touch on mobile. You guys know mobile is changing everything. Alipay, we can talk a lot about that later. And then we did some consumer research on the bottom right. I'm sorry you can't read it, but it basically says, if you ask consumers where do they want to do real-time payments, they'd rather do it through their regulated financial institution. So I believe we, the banks, I'll say me, we've done a really bad job of helping consumers do what they really want to do, is move money in and out of their bank account, especially as the generations move. Millennials, 70% of them don't have a credit card. They use debit cards. They would rather move money in and out of banks because of the banking crisis. I'm sure the credit card companies want to give them cards, but today there's a real movement to, and when you ask the consumers, they say, yes, I would just want to move my money in and out of a bank account in real time. Why can't I do that? They don't understand in this day and age of Google and Apple and Square why we can't do that. So just one other market driver. What do anyone know what all these banks have in common? So they obviously all got breached. And we included, FIS got breached. But it's made us better. We spent about $300 million on our infrastructure in the last 3 years, improving our infrastructure. But these are all the areas where someone can get attacked, and it's daunting out there, and that's why to do these new networks, you need scale, and we've just invested a lot to bring up a network that we think will be the next generation payment system. So it's kind of easy when you have a global perspective, because there's already 14 global networks out there that are doing real-time payments. For the folks who have been in Japan, they've had a real-time payment system since 1979. In the UK, they've had it for 9 years. It just was 100% adopted this year. So we provided the technology, I think, in 2004 or something like that, and it's built over time. Australia is going through an RFP right now. I mentioned that we provided the technology to, much like in Canada, where they had bilateral between the banks, they created one system, a hub and spoke, and so all the banks now go through our system in a hub and spoke model, so there's one EFT platform. So you can see there's a lot of movement, and so the Fed doesn't want to be left behind. We bankers don't want to be left behind, so the movement is really to how we can do real-time payments and move into these markets. There's also, from a bank perspective, there's a really large market of moving money outside the U.S. It's called remittances. It has a dirty word. The CFPB is really all over our friends at MoneyGram and Western Union, and those are cash-to-cash models. Think of it, you walk into a MoneyGram in downtown Chicago, you give them cash, and then you can remit the money to have someone pick it up at a retailer, at a Walmart, or at a bank outside the U.S. What we're talking about doing, we think there's a real opportunity, and why the CFPB likes what we're doing, and the banks we work with, is we're doing a bank-to-bank transaction. So if some people know international ACH or SWIFT, we're replacing those models, and we're doing it from a regulated bank account, which means it's KYC'd, so I know your customer. So the bank is already, so it's not a cash. I'm not walking in and asking someone for their credentials. It's already coming from a regulated bank account, and then I'm moving it to a regulated bank account or to a endpoint where somebody can pick up the cash. So big market will really replace as we move into real-time payments and connect to, think of the US real-time payment network connecting to the UK faster payments network. So you can get to, if PayNet, what we're talking about is connected to the UK faster payments, you can get to any bank account in the UK. And there's other models developing. So from a global perspective, just to give you, so the market, these are the banks on the left-hand side, and then we have DDAs, they're banking accounts, demand deposit accounts, it's another fancy name or stupid banking name for a bank account, checking account. Down below is the currency exchange between the two. And what we really see happening in the market is having banks on one side and clients on the other. And we see 5 really global regions developing. And we're looking to connect into those regions to create a new global network, which is kind of no different than Visa, MasterCard have done over the years. They were obviously very merchant-centric. We're going to be very bank-centric, and then allow our banks to go to their consumers, go to their retailers, I mentioned their treasury management folks, and provide these services to them. So this is what we're working on. We have 10,000 employees in Brazil. We have a joint venture in Brazil with Bradesco. So we're working on connecting the Latin American marketplace, North America. I mentioned our friends from Canada before. We're connecting to Interact in Canada through our NICE relationship. And I mentioned the EU with connecting into faster payments. So this is like where it's going. Things are going to be global. Things are going to be real time. And we're on the journey. Someone mentioned today the mobile payment market is in the first inning. I think we're maybe, or once the Fed comes out with their white paper, I think we'll be in the bottom of the first inning with real-time payments. So now mobile commerce, how does that relate to mobile point of sale? One thing I wanted to mention first before, when the Fed hired McKinsey, that's what you do, you have a lot of money, you don't know what to do. So they hired McKinsey, and they looked at what use cases make sense for real-time payments. So they said, oh, this P2P thing looks really cool. That's one area that will work. We looked at bill payment, doing real-time payments for things. We looked at small dollar amounts, like less than 150,000, so maybe funding a home equity line, or even funding loans. So small, under, it's not huge risk from a settlement risk type stuff. And then there was they have a classic 4x4, or 2x2 matrix, and they had all their cool use cases there, and it made about 11 billion transactions. So, I mean, a lot of stuff. And then in the top left-hand corner, they kept one out, and that was mobile point-of-sale payments. $31 billion worth of payments. They said, oh, we're not going to talk about it. So I'm here to talk about that, because I will tell you, I was in New York 2 weeks ago speaking to a top 5 bank in New York City. They're all there, but you can figure out which one it was. And Table, and they just hired a new person to run enterprise payments, and they asked me to come in and brief them on what's going on, and they expected me to talk about how we talked beforehand, and I told them how we could fulfill all the Fed's use cases that they presented, and so that was good. And then I said, oh yeah, there's also, we can do this card thing, and I knew they're a card-centric bank, and the room just went dead. And I wasn't, they appreciated, I found out afterwards, they were shocked. And I'm like, you're shocked? I mean, this is where it's going. Look at Australia, look at Japan, look at other markets around the world. If you just, people are going to do real-time payments as these models evolve. So I think there's a huge landscape. If you think back, since I'm in the banking world and we run the NICE network, which is it's how you get your money out. It's in the Northeast, an ATM network. Today, you don't look on the back of your debit card to figure out where you're going to get your money. There's the little bugs on the back. Today, you just put your ATM card in and it works. So whatever model eventually adopts, there'll be interoperability. It will just take time. It will take faster. It took about 15 years, I believe, for the ATM network. So now Star and NICE and Pulse and Shazam and Affen and I don't know, there's like 12 major Pulse, Visa, MasterCard. There's about 12 major PIN-based debit network or ATM networks that talk to each other today. And so I assume that a lot of these things will eventually talk to each other. So what we have is FIS Mobile. We created the Starbucks app. We bought a company called mFoundry. They created the Starbucks app. We just rolled out the Subway app. When we talk about MCX, I'll talk to you about it a little bit. We provide the technology for MCX. So the mobile wallet is a company in Boston we have an investment in called Paydiant. And then the network is our technology. Just like I said, we provide the infrastructure for faster payments. We provide the infrastructure for MasterCard. We provide the infrastructure for NICE. We also provide the infrastructure for MCX. So MCX are some really smart people in Boston who are developing their own set of rules, their own network, and how it's going to work with the merchants and how it's going to work with the issuers or the banks, and we provide the technology for that. And so what we see happening is amongst other tenders, like Dee said, this could be one tender or multiple tenders. You could have PayPal, Visa, MasterCard, Discover, and a bank credentials. We talked a lot about tokens. We can talk about it. We assume the banks are going to issue tokens. We've talked internally about do we be a token service provider or not. We developed the network to handle any token that comes in because we handle EMV today. We handle other tokens, and we can translate the token onto the network. So we assume you'll have your bank account. It makes sense. Consumers want to pay right out of their bank account. So we'll have integrate our network, and you'll enroll into whatever that is on the wallet or on the website. So any questions before I tell you about PayNet and how it works? Any questions? Yes? Yeah, I will. Yeah, so the question was, would the consumer enroll their card or would they enroll their bank account? So both, But the network that I'm creating would be just your routing, your bank account credentials. We have our own network called NICE. It would be a NICE transaction if you enrolled your card or a Visa transaction. We have the issuers. Well, it depends who issues the wallet. So really, the wallet provider will have control over what tender they'll allow in the wallet. So our friends at Best Buy and Walmart, they'll decide what's in there, or a bank will issue their own wallet and decide what's there. We as PayNet, we as a bank-centric provider, we're providing a new network for the banks to make some money, hopefully to be a little less expensive for the retailers. That's another thing we talk about Durbin. You know, we were trying to be better, faster, cheaper. We heard about the Target Red Card and decoupled debit. Think of decoupled debit, and that rides over the ACH rails. So if you have this and your bank's participating, instead of it being delayed and having problems with non-sufficient funds when the ACH batches run, we'll do a real-time authorization. The money will be debited real-time and moved to the merchant.
So basically what you're providing is another option, another payment option for the consumer. And for the merchant, my question is, how does your payment option compare to the fees that Visa, MasterCard is charging, interchange fees that Visa, MasterCard is charging the merchant?
So the basic question was, what fees is PayNet, the network, providing vis-a-vis Visa or MasterCard? We've aligned our fees, so they're not public. If you participated, we'd give them to you. But they're close to Durbin, what we call Durbin Max on the debit side. They're very closely aligned to Durbin, and we suspect they'll be a little bit below what Durbin is. That's where a new network. The cool things is, you know, people are very fixated on what's the price. Remember, it's kind of a funny secret. You know, there's 1,000 pages of Visa rules and MasterCard rules. They can change the pricing, and they do. Every quarter, they come out with a new pricing. Well, they'll keep going up. Hopefully, we'll keep going down. Because from our perspective, so we're not, because we're a processor, us making 2.5 to 5.5 cents is a good day versus making 2 basis points or more on a transaction. So, and as it goes up with ad valorem. So we're just in a different position. We come at it from a different angle. And so we'll be close to debit pricing depending on the market and things like that. Okay, any other questions before? Yes, sir.
Would the SEPA initiative in Europe affect anything you're trying to do in Europe?
Yeah, so the question is, does SEPA affect anything we're doing in Europe? And the answer is, well, today, what we're going to do is we'll put the transaction into SEPA. So from the US to faster payments in the UK, and then our UK bank will put it into the Eurozone. So SEPA allows you to move money into anywhere in Europe, and that's where it is today. But we think that will evolve as we get banks in those SEPA countries, and we're trying to be eventually a replacement for SWIFT, if that makes sense. So we'll actually move the money versus SWIFT is, as you know, a messaging-based system, and we'll try to evolve beyond that. But it's yet to be. So this is a commercial side of the banking. I know there's a treasury manager here. We bought a company, we just announced it and closed last Wednesday, called Clear2Pay. That was an area we weren't strong in. That's on the commercial side of the banks. And they have all the formats for SEPA, X9, ISO 20022. So if you think about the retail side, what we have today, where we're driving NICE, debit, and MCX and retail payments on the 8583 standard, now we're going to combine that with the capabilities of Clear2Pay, which already has those international standards, because they're in many of the banks. We'll evolve that to do that. That's the strategy. I hope I'm around. Somebody told me last week at Cybos I might have a 20-year career doing this. So I don't know. So here's a quick thing of how it works. So we use the benefits of the ACH. So routing and transit number is what you need to enroll into your bank, into your whatever it is. Could be a website, could be a mobile wallet, could be a bill payment, could be your mortgage provider. Or your bank could issue you a token. I just put a routing and transit number. At some point, we have to convert it to a routing and transit number. That's how the bank knows what it is. We leverage what is cool about EFT, which is debit processing, real-time, instant acknowledgement. The originators pay and the receivers get paid. So that's a fancy word for originators. So could be PayPal, could be a mobile wallet provider, could be a bank doing a P2P transaction, and the receiver gets paid. So the bank will receive, instead of, we don't call it interchange for reasons to stay away from that stuff, we call it receiver gets paid. And then we leverage the strengths, and we think we're going to generate revenue, reduce costs, reduce fraud, and improve the customer experience. So I'm going to wrap up because I know I only have 5 minutes left, but one thing to get your head around, for those, I mentioned the 1,000 pages of rules for Visa, MasterCard. That's something that people don't really appreciate. So PayNet has its own set of network rules. So it's not just technology. We have all the technology we need. We provide it to, we're in 75 different countries around the world providing technology. What makes it special is there's a set of operating rules that tell the banks, tell the regulators, tell the participants how the network operates, just like Visa and MasterCard. So when I hear the people asking about card not present, well, that's in the rules. You asked me about pricing. It's in the rules. What about real-time payments? It's in the rules. What about how will you price MCX transactions? It'll be in the rules. And so that gives us a framework, which is really sets us apart from other, I won't even say names, other emerging alternative payments, is really one of the really cool things about having standards and a set of operating rules that say how the participants, how they should operate, and what they do when they're operating badly and things like that. So I think this is the last slide, and then I'll wrap up with any questions. So we have originators on the left, and we have receivers on the right. So receivers are always banks, and originators, so it's similar to the ACH network, where you're an originator. Just like PayPal, they use Wells Fargo to sponsor them into the network. An originator always needs to be sponsored into the network. So the regulators like us because we have banks on both sides of the network. That's how the integrity of the network works. It's a real-time good funds model, so if you do a transaction, it moves from left to right. You can do debits too, you can do refunds. And then what we do is we do a next day settlement. So for the merchants out there, it operates just like NICE and Star and Pulse and Visa and MasterCard, where it does real-time good funds net settlement. So with that, I'm like 2 minutes, so I try to keep to the time. Questions? So we do real-time good funds with next day net settlement, which means so if B of A owned $100 million to Wells and Wells owed $100 million to B of A, they would get a $0 ACH transaction the next day. So we net it out for the participants to reduce the risk in the network. Does that make sense? No? Looks perplexed. I couldn't hear the question. So if you want to pay me, you're going to send me money, good funds. I'm going to send your bank an 8583 transaction. It's going to say, you have the money. I'm going to take it out of your money real time. It's gone from you as the consumer. Gone, and now it's in the network. The network at the end of the night just settles up. So if your banks had 50 transactions, and another bank had 50 transactions, that's kind of what happens. You reduce the settlement positions. But from a consumer perspective, it's gone. It's totally gone. From a bank perspective, we net out amongst the bank parties. That's the way the debit transactions worked. So the merchants would get funded real time, yeah. Mm-hmm. And their bank would get the money the next day. Mm-hmm. Travis?
So, from an interface standpoint, you mentioned 8583 theory, which people say nice or weekly, but interfacing with the network, is that an API type of interface?
I didn't even ask him to ask this question. He asked, what's the interface? So I'm a merchant, how do I get started? So we have the old clunky 8583, which I know Travis knows all about, and we can do that interface. But we've actually, I think it's one of the innovations we've done. We've wrapped ISO, I don't even know if you know this, we wrapped XML around an ISO message, and now we have an API that you can consume that actually gives you both card transactions, the PIN-based debit NICE transactions, and the non-card routing and transit PayNet, and it's in one API. Yes? Uh, The question is there tokenization as an option? The answer is, so just to answer it correctly, we are not the tokenization provider, but we allow you to insert a token into the API for us to process, like to a Visa or some CSC as a token provider. A lot of people have these token things. So we've not issued one, but yes, we can process them.
Can you describe in a P2P situation, the immediate availability of funds versus that?
Yeah, so in a P2P, so when I log on to my mobile app, and I have like all those examples, we have a lot of cool things. So this is our People Pay initiative. You log onto it's just like mobile banking. You log on to it. I want to pay Dave, and I send money. It's real time. It's a real-time debit out of my account and a real-time credit into Dave's account. Period, end of story. The bank settlement, and that's why a lot of people don't fully appreciate. Bank settlement works a little different, and we settle next day between the parties. But the consumer experience is real time. And by the way, we could do real time to the banks. I heard a lot of discussion about the infrastructure. Well, we provide that bank infrastructure to 14,000 institutions around the globe. It's old and it's not real time. So it's hard for them to accept a real time settlement transaction. I know I'm getting a little payment geeky, but so it's a real time good funds transaction with next day settlement to ride the existing rails. Will?
How does this compare to some of the other P2P plays like Venmo? And is there a fee from the originator?
Yeah, the question is, how does this compare to Venmo and others? So Dawala, and I'll just say, in general, they're not a network environment. This is really important. So our People Pay, so this is equivalent of Venmo. We have our own application. So I'd say our application compete with Pop Money from Fiserv, from Venmo, and all the other providers. But underlying that, what we use to drive it is a network offering versus the traditional ACH rails. That's the difference. Is there an API for third parties? Yes, that was similar to what Travis asked. Exactly. Yes, sir.
And how does this compare to Clear Exchange, the US banks?
Yeah, so there's 4 banks that are participating today in Clear Exchange. So the question was, how does this compare to Clear Exchange? There's 4 major banks. They're pretty big banks: Wells, B of A, Chase, and Cap One, and they're participating in P2P models. So a couple of things. I mentioned the concept of real time between parties. They don't do real times bank to bank. They still follow the ACH. So within your own bank, those big banks, it's obviously real time. That's not a big trick. We do that all the time. But from Wells to B of A, it's not real time. It goes ACH, and they do gross settlement between the parties on the next day settlement. So it's not a good customer experience. They aren't funded yet. They could. And if they were funded to do real time, we've talked to them. We've offered to be their real time network to allow them to move into the modern age. They're taking baby steps, if you will, and I think it's a good step. We talked about where we are today. We're in the first inning. I applaud them for getting those 4 banks in a room cooperating, but I think it will evolve into real-time networks and something like PayNet. And by the way, PayNet happened to be, we named it because we had this name for 20 years. It was a name of a product that we decommissioned at FIS. I never meant it to be its own name. Now it has its life of its own. And we really, no one knows FIS. We're the Intel inside. We don't want to be, a branded network. We're not trying to compete with Visa and MasterCard. We're trying to support our brands like we do in MCX or Currency, or support Walmart and Best Buy and Visa and MasterCard and faster payments. We provide the infrastructure to support the banks and the retailers we serve. Yes.
This is a short funds transfer, so doesn't Durbin govern this transfer? In other words, you're being told how much to charge, correct?
So the question is, I think the question was, are we being told by Durbin what to charge? And the answer is no. We did some things. We don't believe that this is Durbin compliant. However, I made very specific things that so you can always charge lower than Durbin, so it's not an issue. So we basically are aligned lower than Durbin. But today, we're not, if you read the rules, our attorneys, we're not governed by Durbin. But it doesn't make a difference. If we're lower than Durbin, what's the, I'm sorry, maybe I'm missing the question, because you don't seem to appreciate that answer. we're saying it's an EFT network, so we're governed by things like Reg E. We treat the transactions like Reg E transactions. And so that's how we govern it. And then we, and I've been to Washington a few times, so that's how we today. And, certainly the CFPB, which was a result of Durbin, we're certainly governed, and FIS is managed. We're regulated by the FFIEC, which I've been through 2 audits. So, I mean, we are governed, we're just governed a little bit differently than you're suggesting, and I can talk to you about it later. Yes?
Your scenario, you talk about next day bank settlement. Or is it up to the acquiring bank to provide good funds to the merchant? Like, what are you saying that overnight risk?
Yeah, so the question is, in a good funds model or in a debit model, do the banks fund effectively those transactions? And the answer is they do, just like they do today in Visa and MasterCard and Star and NICE and Pulse and Shazam and others. So the rules, back to what is the difference between us and some of the other providers, the rules say, if you get a transaction that looks like this, smells like this, you must fund it and you must make it good funds. And then, so yes, they are providing the overnight settlement risk. So that's why we have banks on both sides, if I showed you the transaction. So that's how the debit networks work today. We just really replicated that model without using a card.
I think this is a great alternative for a merchant, especially e-commerce merchants. When it comes to risk, if it works like an ACH, does a consumer have a certain time frame, like 60?
Yeah, so I mentioned, so the question was, what's the consumer protection for these transactions? And they follow Reg E transactions. So and your bank can provide whatever additional transaction, but the letter of the law is if you tell them within 3 days, you're out $50. If you tell them within 60 days, it's $500. And then if you, beyond that, and that's traditional Reg E. But in today's banking environment, and I told you I'm on the board of a bank, and I don't know any bank in today's world that doesn't make you good. And that's in the terms and conditions. So you can, the low bar is what the regulators tell you to do, but your bank can tell you what they really do. And I personally, unless someone else don't, I mean, Cap One, I know, they make good because of everything in the, if you got breached, you don't know anything. But that's your bank. So did I answer that? You follow that? Yeah, so the low bar is 3 days, $50, 60 days, $500. But banks ultimately, when the things you don't read when you say what you're going to do, the terms and conditions, it says in there what your bank will actually do, which is typically less, greater liability or less liability for you. Yeah. Okay, wrap up. Absolutely. So thank you. I appreciate it.